Hello, everyone, and welcome to another webinar here at IQ Option. For those of you joining for the first time, hello, I'm Stavros. I'm an account manager here at the company, guys, and today we are going to be looking at a great binary option strategy that I think you guys will love. All right, now before we begin, guys, please take the time, read our disclaimer, which I will be sharing just now. All right, let's wait a couple of more seconds for everyone to join, and we are going to begin shortly. Apishek, hello. Hello, Ahmed. Toradol, hello. Lisa, hello. Hello, everyone. Thank you for joining. High attendance, as always. Glad to hear that. Hopefully, you're going to learn something interesting, something new today that you can apply to your trading. All right, so read the disclaimer once again, guys, and we will begin shortly, okay? Hello again to everyone that I've missed. I see a lot of hellos here, so glad to see that everyone's excited for this. All right. Hello to Philippines. Hello to Nigeria. Hello to everyone. All right. So, guys, let us begin now. Again, for those of you that just joined, read our disclaimer. Today's webinar is going to be based on a strategy that you guys can use when it comes to trading with options. Now, in all of my webinars, I have people asking me that you guys want to see more and more strategies with binary options, which is the most popular category here. So today we're going to be looking at a fantastic strategy that will not only give you some nice results, but at the same time limit your risks, because remember, in trading there are risks. So without any further ado, let us begin. So guys, as always, at the end of the webinar, we're going to have our Q&A. Our lovely moderators will be answering as many questions as I can, but at the end, of course, if you've missed something, if you don't understand something, feel free to leave a question, a comment below, and at the end, I will make sure to answer all of them as best of my abilities. All right, so let's begin. So guys, why do I insist of doing a webinar on different strategies? Because obviously having a strategy is very important. All right, so first of all, guys, no matter what kind of an asset, financial instrument you are trading, there are two common requirements to actually be consistent and successful. All right, so first of all, of course, a strategy. Guys, you need a plan. All right, you need some kind of an approach. You cannot, just jump into trading without having some kind of plan, an approach, and just trade blindly without any, without any reason. All right, so you need a strategy, first of all, and second of all, of course, you need risk management. All right, so sticking to a trading strategy basically allows you to be more focused on the approach that you're going to be using. All right, and actually be on the same path without actually, avoiding the need for any necessary emotions and basically all of that noise. All right, because there's going to be a lot of noise when you're trading, and basically having one specific approach that has been tested by you and works will be the best thing to be more systematic for your crucial long-term success. All right, you're going to be consistent. Now, the strategy that we're going to be looking today is the locking strategy. Now, this works very nicely with options, with binary options specifically. I'm sure some of you might know this. For those of you that do, I'm sure you're going to learn something new today. For those of you that, this is again brand new, again, this is something that you're going to be able to apply as soon as the webinar is finished and see the results that you get. All right. Now, what exactly is locking? All right, people in the comments, if you use this before, leave a comment below as to what locking is for you and any kind of other strategy that you might have used. All right, so let's get to it. So what does locking actually mean? So guys, locking basically involves opening two trades in the opposite direction within a specific range, within a specific distance. All right, now, if both binary options expire within the zone, then both trades are profitable. All right, so again, you have a specific range that you're going to be trading in. Let's say you you go long. All right, your other trade is going to be a short trade. So they always need to be opposite, and you always need to create a lock within some kind of a range. All right, don't worry, I will take the time and elaborate more, and we're going to look at a couple of examples for you to understand. Now, what I want to point out here is that if only one of the two trades is successful, it's going to cover the losses from the second trade either partially or fully. Okay, so we're going to look at a couple of examples for you to get the idea, because it will vary from trade to trade and different amounts that you use. All right, Quanile, absolutely correct. So let's jump into it. Now we're going to look at a couple of results. Okay, so first of all, we have outcome number 2 where both trades are successful. Okay, so we have trade number 1 here. We open our trade for $10. All right, and we want to wait for the trade to actually start going up for us to be able to open our second trade. All right, so this is the main criteria. All right, ideally you want price to actually move in your favor for you to be able to open your second trade and create a lock. All right, so we have our first position here, $10, $8 for our second trade, and of course this is where the trade actually closes. All right, so let's look at the details together. So we have a profitability of 80%, and this is gonna, this will matter. It's very important to look at the profitability, and I'll explain why in a little bit. All right, so we have trade number 1 here, where we called, as you can see here, for $10. We wait for the price to move in our favor. All right, and that is when we open our second trade, trade number 2 for $8. Now, why are these two amounts different? Because your trade number 2 is going to be based on the profitability. Trade number 2 always is based on the profitability, which I will elaborate, in a couple of slides from now. Now, ideally, guys, you want the expiration time to actually finish, to close within this range. So if you open the 2 trades, you create a lock. Ideally, you want the trade to close in between these 2 positions for you to make any kind of profit, right? So let's look at the details. In this trade here, both trades are successful. So what does this mean? Our trade number 1 gives you an additional $8. So you've made $8 in addition to your investment amount. And of course, trade number 2 gives you an additional $6.40 US dollars. So in total, guys, very good. We've made a profit. So in addition to whatever you invested of $14.40 US dollars. Great results. All right. But guys, it's not always going to be sunshine. There are going to be a couple of other scenarios where they might not be, a win-win all the time. So in this scenario here, I want to show you why even breaking even is going to be more beneficial when you're locking. So again, we have our first trade here. We have basically shorted the trade for $10. All right. Now, as you can see here, I wait for the trade to actually move in my favor, and I open my second trade. All right. Now, again, this is based on the profitability that we have. All right. So can anyone tell me, so if we have our second trade being $8.4, what do you think the profitability is going to be? Anyone in the comments? Based on what we said before, what do you think the profitability of, this specific scenario is going to be? All right, let's look at it. It's going to be 84%. Okay, so again, let's look at the details once again. Trade number 1, we put for $10. We wait for the trade to go in our favor, and we open our second trade. Our second trade is based on our profitability, which is going to be $8.40. Sorry. Now, we see here that not both trades are successful. Actually, only one of them is successful, and it's actually going to be trade number 1. So as you can see here, when we open our trade number 2 here, it went below our expected direction, so it ended up in a loss. But it's not all bad here, guys. So what does trade number 1 gets us with a profitability of 84%? We get $8.40. All right. Now trade number 2 here was not successful, so we've lost the trade, but we've basically broken even. We haven't lost. any of our investment amount. All right, so we haven't lost the $10 that we put. We haven't lost our $8.40 that we put for trade number 2, but we didn't make any profits. Okay, so what is the point that I'm trying to make here is that if you were to open one trade, all right, let's assume here you opened a call position and price didn't go in your favor, you would lose $10. All right, so by using locking, you also are able to actually limit your risks. All right, and in this case, you know, the scenario that we have is that we broke even. We didn't make any profit, but it wasn't horrible. We didn't make any losses. All right, moving on to our next example here, which is minimizing our risk. All right, so trade number 1, guys, you see again that we open, we call for $10, we wait for price to move in our favor, and we open our second trade, which once again is based on our profitability. Okay, so again, profitability is 84%. Trade number 1 here, we've invested $10. Trade number 2, we opened our second position for $8.40, which is based on the profitability. Okay. What are the results here? You know, as you can see here, the expiration, the price closed here. So one of the trades was not successful. In this case, again, trade number 1 was not successful. We lost the $10. All right. Now, trade number 2, though, did actually give us a good result. As we can see here, $7.06 US. Okay. So in total, guys, yes, this is a loss. We've lost minus $2.94 US. But again, guys, this is going to vary on a lot of factors. All right. My point that I'm trying to make here is that if you were to only have one trade, again, you called and it didn't go in your favor, then you basically lose all of the investment amount. So again, you are minimizing your risk by creating a lock. All right, this is what I want you to gain from this. Okay, now one very important thing. So you've seen me mention that you need to open your second trade based on the profitability. So if trade number 1's investment amount is $10 with an 80% profitability, can anyone tell me what would be my trade number 2? What would be the amount that I should put for trade number 2? I'm waiting in the comments to see who can answer this question. So again, if investment amount is $10, all right, we say that our second trade is always based on the profitability. Yes, who's that? Divyashu, $8, that's correct. So guys, trade number 2 needs to be perfect. I'm glad everyone's getting it. Fantastic. Okay. $8, absolutely spot on, guys. Thank you for that. So, as I mentioned before, very important. Our trade number 2 always is going to be based on the profitability. So let me give you another example here. So if I were to use here $100 for investment number 1, all right, pay attention here. Let's see who gets this correct. So trade number 1 here is $100 with an 82% profitability. What would be trade number 2? So again, trade number 1 is $100 with a profitability of 82%. 82%, guys. Yes. So the first one to get this correct, Kanajaraj, sorry for the pronunciation, 82, perfect, guys. So $82. Oh, all right, you get it, perfect. So let's look at how you are going to be setting up, the platform to actually use the locking method. So first of all, guys, it needs to be on binary options. All right, not on Forex, not on cryptos, not on digital, binary options. Now we're talking about a strategy for binary options, right? Second of all, you need to have an expiration time that is equal to 15 minutes and above. All right. The reason for this is that we want to give price enough time to actually move in the direction that we wanted to create a lock. All right. Lower expiration times it's just too fast to create any kind of a look. All right, so 15 minutes and above is what we're using for this strategy. All right, so one other thing, of course, this is something that I mentioned before. You need two opposing trades to be taken. So if I were to call, my second trade would be a put. If I were to press lower, my other trade, my trade number two, would be higher. Right, so two opposing trades. Fourth thing, sorry guys, is that the same asset needs to be for both trades. So if you're trading on Euro USD, you open your trade on Euro USD, you're not gonna jump to another currency pair and short GBP USD. All right, it needs to be on the same asset. Okay. Second of all, fifth point here is it also needs to be the same expiration time for the both position. So if you guys use 15 minutes expiration time for your trade number one, it needs to be the same expiration time for trade number two. All right. Now, a couple of things to watch out for. This strategy is going to work best with volatility. You want the movement because you want enough movement to be able to create a nice gap for you to be able to look. All right. Second point here is this works best with a ranging market. Now, we've talked about ranging markets before. It's basically where you see the price of whatever asset you're trading on to actually be moving in a sideways direction. And there's a lot of indicators that you can actually use, all right, to help you understand when you have a ranging market. One example would be the RSI. All right. Finally, of course, you avoid trading on the opposite, which is a trending market. So if you're seeing that you're trading on an asset, let's say Euro USD, and you're in your 15-minute expiration time with 1 minute expiration, with 1 minute candlestick, and you're seeing the price is just increasing over time, then that is a trending market. That's a no-no, guys. Okay. All right, so now guys, I will take the time and I'm gonna move to the platform so I can actually show you a couple of things. All right, just a second. So you can actually see how we're gonna set up our platform to apply some, locking on different assets. Okay, so there you go, guys, just a second. So all right, guys, I do apologize for the camera. So guys, we are on the platform here. So first thing that you are going to do is you are going to look at the expiration time that you want to be setting. All right, so first thing first, you go here. For the sake of this example, guys, because I want to answer as many questions as I can, I do see already a lot of different questions on people that have some questions for the webinar. So I want to take the time and answer as many questions as I can. So for the sake of the example, I'm going to be using a 5-minute expiration time. Now, you guys will be using 15 minutes and above. All right, so first thing you do, you set your expiration time. Second thing you do is you go here to the candlestick time period, and usually, if you guys remember from our previous webinars, you divide the expiration time by around 3 or 4 times. That will give you our candlestick time period. So again, we're going to be using around a minute. Okay. Third thing that you need to do is you need to watch out for the purchase time. You need to have enough time to be able to open 2 opposing positions within the same range. Okay, so this is a go. Okay, we have a good expiration time. We set our, and this is where I would actually open my first position. So you see here we have some kind of a sideways movement here. I've opened my first trade here. I'm gonna wait for the trade to move in my favor. In the meantime, guys, I adjust my amount for my second trade. You see it's 95% profit, so I'm getting ready for my second position, which is going to be 95 euros in this example. Okay, and let's just wait and see. All right, now we have plenty of time for price to move. Let's see if it's going to respect some of our support and resistance that we've had here. In the meantime, I'm going to jump onto some other assets. All right, so as we can see here, we do have a sideways movement here this has broken above. All right, but we can still actually do a lock here. It's not going to be the best example, but we're not going to do that because, guys, look, purchase time here is about to expire. Also, we're on 1 minute expiration time. All right, so again, expiration time, you set it. You can set your support resistance, guys. So again, for the sake of the example here, I'm going to be opening a position at this point here. All right, and the ideal scenario for me is for price to go at this point here. It's just for you to create a mini lock here so you guys can see. All right, so again, you're going to set your position for the second trade here. And let's just wait and see how this goes. So let's see here. Okay, so we need price to go a little bit in the other direction for us to make a lock. Same applies here. All right, so what I want to point out here is that you need to be patient. All right, you're locking, so you need to lock 2 trades in the opposite position based on what we talked about. All right, and there needs to be some kind of a gap just to get optimal results. All right, the bigger the gap, in theory, the more likely that the price is going to close somewhere within that gap. Ideally, you want, again, price to be in the middle of both, so both trades are profitable. Okay, so this is not moving in our favor. We still have 3 minutes here and another 1 minute here. All right, so again, how you would figure out this range, you can use the RSI to see whether or not the market is ranging. You can draw your support and resistance. As you can see here, I've pre-drawn my support and resistance based on some previous price movements. Okay, so let's just zoom in a little bit more here so everyone can see. So as you see here, I've opened my trade here. I'm expecting that price will go in the, in the downwards direction for me to be able to create any kind of a lock. All right, the same applies for here. All right, so let's see whether or not we are going to be able to do a nice lock. Again, guys, for the sake of the example, you might not get the biggest distance in terms of the lock. It's just for you guys to understand, what locking actually is. All right, so if this was a call position right now and you see price moved all the way up here, I would actually short the trade. All right, so again here, guys, we have 25 seconds for me to be able to, open another trade in the opposite direction. Doesn't seem to be the case. And again, trade number 2 here. Let's wait and see what's going to happen here. All right, so you need to be patient. You need to have all criteria actually meet. Okay, so you have your distance. Okay, this opened right about. All right, so you can see here that we have a tiny lock here. But what do you see here? So you see initially we had one price. We were in a loss. All right, I created this lock here, so we were basically going to be either breaking even if we're that lucky and it closes. If it closes, at this. All right, let's just wait and see. Okay, so what do we see, guys? Here we lost 9 euros and 75 cents. All right, we would have lost much more. Okay, if I only had that one trade. All right, so by locking, you're basically going to be limiting your risks. There are going to be scenarios where you actually break even, where you lose much less than what you would usually lose if you had one trade in your that wasn't in your favor, right? So by me locking, instead of losing the full investment amount you just saw here, all right, we actually lost. Okay, we actually lost much less than that. Okay, much less. So our 2 trades involved 195 euros. All right, if I only had one trade, either 100 euros or 95 euros, I would lose either 100 or 95. By locking, even if it was in that small gap, I only lost this amount. Okay. Yes, trade was not successful, but again, guys, remember that not all trades are going to be successful. the point of locking is to either break even or to minimize your losses. If both trades are successful because price closed within the range, that is perfect. Okay. So guys, I'm now going to be jumping on to the question part of the webinar here. I do see a couple of questions here that I do want to address. So Atish Makharaj says, how are you getting your profitability percentage? All right. Profitability is based on, what you're trading on, what time of the day it is, how much movement that kind of asset is, what kind of an asset it is. So profitability is going to vary based on market conditions and based on other things as well. All right, but it's going to vary based on different conditions, usually market conditions. All right. Okay, let me just show another example here. Okay, so just a second. Let me just close this. All right, so first things first, guys, again, set your expiration time real quick. All right. Make sure that you have your candlestick time period. And if I were to, look at this point here, I would open my trade here and I expect that price is going to go up. As soon as you see any kind of upwards movement, the bigger the better. That is where you're going to open your second trade, guys, based on the profitability. All right, so let's wait and see once again. We are going to short the trade. We have plenty of time in terms of purchase time. So let's just give it a couple of minutes. All right, in the meantime, Bollinger Bands is a nice indicator to help you see how volatile an asset is. All right, so guys, you see that this is moving within our favor. Let me just wait a little bit more. I can still create a lock here. All right, I just want price to move a little bit higher so I can create a bigger gap. All right, but even this opening at this point here would have created a lock for me. All right, so all right then, guys, so I've created my lock here. So you can see here, again, let's go through the details together. First trade, $100. Second trade is going to be based on our profitability. All right, now remember, guys, opposite trades, of course, and ideally we want price to close within this point here. All right, now as you can see here, one of my trades is profitable. Okay, so in this case here, this trade is my profitable trade. All right, this at this point here again is also profitable. All right, but if this continues going down, then only one of my trade is going to be profitable. All right, let's just wait and see. Ideally, the point here is open two opposing positions. First position is, let's say, $100. Your second position is always going to be based on the profitability. All right, and ideally, you want price to close within this range here. The bigger the range, guys, the more likely that the trade is going to be, both trades are going to be successful. All right, so be patient. Again, for the sake of the example, I'm using smaller expiration times for you to actually get the point of this. All right, so when you're going to be using 15-minute expiration times, you're going to have more time for price to move in your range. You can also use support and resistance to actually identify what kind of a range you have. If you have a range, support, resistance, and so on. Okay, so let's just wait and see what happens with with this trade. All right, in the meantime, guys, let me just see here a couple of questions. Okay, let me see here. Looking for Any kind of questions? Look, overall, guys, we're seeing that price is moving within this range here. Obviously, at any point, it can break above or below. But again, we're limiting our risks because one trade is going to be successful, the other one is going to be unsuccessful. If it was only one trade and it didn't go in your favor, you would lose all of the amount. All right. So in this case here, again, guys, we're seeing that trade number 2 right now is the profitable one. Trade number 1 is not. All right. Let's see how it's eventually going to go. All right. Let me see any questions here. Prashant says, is there any confirmation to place trade? Could you elaborate a little bit on this? You mean if when you open your trade, you're asked any kind of confirmation? Usually, yes, you are, but you can there's an option for you to set where you don't have to have that all the time. All right, Abhishek, okay, I appreciate you not liking the strategy, but again, this isn't gonna be for everyone. This is a great strategy that I personally use when I'm trading, all right? But again, you need to have all the criteria actually be in your favor, all right? You're not gonna rush, you're gonna wait for you to be able to see some kind of a movement in your favor. The bigger the movement, the better it's going to be for you, all right? Just be patient, follow the steps that I showed you, and remember, use a higher expiration time than what I've used right now. So 15 minutes and above for us to be able to get any kind of a movement, a good movement, right? So again, guys, here, what am I seeing here, all right? The end result here is that we lost 9.75, okay? So we opened 2 trades, 100 euros and 95 euros. All right. And one of our trade was successful, the other one was not. Okay. We still only lost 9.75 euros in this trade. Okay. 15 minutes and above. Now let me see any other questions that you guys might have. I see a lot of questions that have been asked. Answered already, sorry about that. Abdi Wahab, which is better, digital or binary? Because digital is very high profit, but again, remember, digital also involves price levels, all right? So two different categories, okay? Kluivet Eric says, I didn't understand the strategy. So look, let me just give you the basic again. So you want to create a lock. When I mean by a lock, I mean you want to lock, you want to lock 2 trades, 2 opposing trades in the same direction, facing each other. So if you're going to go long, so if you're going to press higher, okay, you wait for the price to move in your favor, so go up, and you're going to open a second trade, so press lower, okay, to create this lock. Now, ideally, you want price to be in the same channel, all right? But again, if the trade goes up or down, you're going to be losing way less than if you had one trade that didn't go in your favor, because one of the trades is going to give you a profit, the other one is going to be a loss, all right? Again, guys, keep in mind that we also need to have a market that's volatile, okay? So volatile market, set your expiration times correctly. So 15 minutes and above, not 5 that I'm using right now. Fix your candlestick time period. Make sure that you have enough time to actually use open 2 trades in the same option. Trade number 2 needs to be the same as the profitability. It's going to be based on the profitability here. All right. And you just need to be patient to meet all the right criteria. Kilebogila says, what is the candle time? So candlestick time period should be whatever your expiration time is, divide that by 3 or 4, should be somewhere close to that number. All right, so 5 minutes here, I didn't want to put 2, so I put 1, which is close enough. Okay. Let me see other questions that you guys might have. I do see that a lot of questions are the same. See here. So most of the questions I see here have been answered. Okay. Apuri Cruz says, how do you choose your market? So look, you can choose your market based on your liking, but remember that you need to see whether or not you have a ranging market and you have good movement. Okay, so what I usually do is I apply my RSI. I try to see, I adjust my expiration time to, what I'm going to be trading with, candlestick time period, and then I see whether or not you have movement, price movement. If you're seeing that price barely moves from that position, it means that you don't have, a lot of volatility for you to create any kind of, gap to be able to use a lock. Freddie, you're very welcome. All right, try it out in your account, guys. See how it works. Be patient. Use the rules that I told you about, and hopefully you're going to be able to, get some nice results. Just be patient. Okay. Guys, I think that most of the questions have been answered. Okay. Try the locking method. See how you're able to do. Again, you're going to be able to get some different results. But again, the point of this is not only to maximize profits, but to actually give you some good risk management tools where you're not going to lose a trade if it doesn't go in your favor. You're going to have different outcomes, which might be even better than just having a single trade. All right, which might end up in a complete loss. All right, guys. So for the time being, I think this is going to be it. All right. Once again, thank you very much for joining. I hope that you've gained something from this. Remember, this webinar, for those of you that might have missed something, will be sent out to you guys within the following days. All right. So for the time being, thank you for your time, guys. Have a great day. And of course, stay safe. Okay. All right, guys. Bye-bye. Thank you.